Hedge in Chicago. Ted, thanks for sticking around on a day like today. What jumps out of you there?
It's a pretty quiet day for the row crops, right? We're treading water. The corn still just hovering below that 50-day moving average. At some point, we need to challenge it and get over it. Otherwise, we'll see a bit of a pullback. But today's not that day, so that's good. Soybeans have been kind of a little bit heavy here, but not falling apart. Just kind of holding. Not a lot going on. The big thing today is the wheat. Scott, don't look now, but you have maybe the best looking potential bottom the wheat has had in a while. And I say potential bottom because there's a lot more work yet to do. We're currently testing the 20-day moving average, which is, it's been a point of failure for the wheat, kind of throughout this move. So there's a big test yet to come, but we still have that key reversal that we had from 2 weeks ago intact. We've not taken out that contract low. You had the reversal higher yesterday. We have extension on that today. We have more concerns about Russia attacking Ukrainian ports and that heating up again. And really, it's the same thing we've been talking about for almost 3 years now, or pretty much 3 years now, Scott. But hey, wheat's been in this massive downtrend for a long time and finally showing some signs of life for our technical traders that can say, hey, maybe this is something. And that could spill over to the row crops, especially corn. I think with beans being under pressure, lately, corn's kind of shrugging it off. And I think a big portion of that is because of what's going on with the wheat. So maybe that's a sign of hope. Maybe it means that we have some more upside potential. However, what I am also going to say is that we're getting closer to Thursday. In a week from Thursday, we got our prospective plantings report. We're going to start talking about acreage more and more over the course of the next 8 to 10 days, or between now and a week from Thursday. And I don't know if that conversation is going to be all that bullish. So that's my concern on the bear side of the equation. We don't really need to gain any acreage in any places except for maybe cotton.
And if we do, does that weigh heavy?
Yeah, a lot of times we'll kind of, in years like this where we have fairly reasonably sized carryovers, we don't really rally into planting. We don't rally into planting when it's fairly dry and fairly warm, and it looks like we're going to get off to a really good early start. A lot of people want to make the comparison to 2012 on a drought monitor and things like that, and I hear that. I really do. But also think about 2012, we were under a lot of pressure at the start of that because we got off to early planting. We had really good prospects. We ended up with more corn acreage than what we were originally expecting. So we might have to get through that before we can start talking about, potential hot and dry conditions later on in the growing season.
All right. Okay. Great stuff. Stay right there, though. We need to go away. Let's bring back in Ted Seifried, Zaner Ag Hedge in Chicago. Anything you want to get off your chest when it comes to the livestock there, Ted?
Well, Scott, not much moving, right?
Yeah, right.
Look, we've gone so sideways, really, since the beginning of February. You look at live cattle, feeder cattle, it's been a very sideways trade. And, we went up and closed that gap. Everybody was like, okay, myself included, by the way. Everybody was like, okay, now it's time for this bigger correction. It's just not happened. We've gotten head fake after head fake in both directions, and all we're left with is some sideways trade, which I think overall is actually a really good thing. We've certainly fixed the overbought condition of the market. We are not in overbought territory right now for either feeder cattle or live cattle. But it really makes you wonder, where do we go next? When and where do we break out of this sort of sideways range? And what's going to be the catalyst for that? You look down at like stock markets and things like that doing really well today. That's a positive influence, yet we've got slightly negative numbers on the board. We've kind of disassociated ourselves from that. Right. You've got kind of threatening to trade higher, but you've got box beefs, even though higher, lagging behind and really kind of hurting the packers margins. So again, you still feel like you're in the time frame or in the area where you could have that deeper correction, but it just hasn't happened. So that's encouraging. And then, hogs kind of sideways too, but just in a much broader range.
Perfect stuff. Great content as usual. I really appreciate you coming on the show. Thank you very much, Ted. Ted Seifried, Zaner Ag Hedge in Chicago. We'll bring it back here to Nashville where you and I are sitting.
One last time. Thank you so much, Scott. Appreciate it.